Hello everyone, welcome to Infinite Floating Stocks. I'm Venkat and in this session I'm going to talk about bull put spread option strategy. Okay, so the name of the strategy is bull put. In previous session we talked about bull call. Here I'm going to talk about bull put. Okay, so these two strategies are pretty same, pretty similar. Okay, but we deal with put options here. In previous session I was dealing with call options, but here I'll be dealing about put options. Okay, but your view is same. We're gonna implement the strategy in a bullish market. Okay, all right, let's start. I'll be explaining you a lot many things in next few minutes related to this strategy. All right. So these are the contents for today's session. I'm going to talk about what is bull put spread option strategy and which strikes to choose and what's the risk and reward involved in it. I mean, when you implement the strategy, what will be your break even, so risk and reward ratio. Okay. And I'll be showing you the payoff chart and how do you use it when you are on a trade with using the strategy. And I'll be talking about when to implement the strategy. Okay. And I'll be giving you a few insights on entry, exit, and stop loss for bull call spread option strategy. Sorry, bull put spread option strategy. And finally, I'll be concluding the session by talking about, I'll be concluding the session telling you out few very important points that you need to be keeping in the mind while dealing with the strategy. All right, let's start. What is bull put? Look at the name. Name is bull put. That means we need bullish market. We need bullish view. Our analysis should say the market gonna move up before next expiry. Okay, so we need bullish view. What is put? We'll be dealing in. We'll be dealing with put options. So we have included that in the title of the strategy. Okay. All right. This is a formal definition regarding bull put spread. Okay, so the bull put spread is an option strategy which is used when option trader. Okay, simple. See, bull put spread option strategy is used when option trader, that means we thinks that the price of underlying security or underlying asset will go up moderately, go upward. That means our view is bullish here. Okay, go upward moderately in the near term future. Okay, and bull put spreads can be implemented by selling at the money put option and buying out of the money put option. See, this is reverse. All right. In bull call spread, what we did, we bought at the money call option and we sold out of the money call option. Okay. So here reverse. Here in bull put spread, if our view is bullish, we gonna sell at the money put option and buy out of the money put option. Okay, so of the same underlying security of the same expiration date, that is, you already know this. Okay, and the bull put spread option strategy is also known as bull put credit spread. Okay, so that's the alternate name for bull put spread. We call it as bull put credit spread. Okay, all right, so which strikes to choose? Simple. Let's get on to payoff chart for better explanation. Okay, let me refresh. All right, select the Nifty, select option, select nearest expiry, and select at the money. At the money is 15,000. Yeah, 15,000. At the money is 15,000. 15,000 is at the money. What I should, I'll be dealing with puts only because the name of the strategy is bull put spread. Okay, so I'll be dealing with only puts. And what should I do? I need to be selling at the money. This is at the money. 15,000 is at the money. I am selling. I have selected sell here. I am selling at the money put option. Okay, and what I need to do, I need to buy out of the money put option. Okay, what is out of the money put option? Let's get on to option chain and let me select Nifty and out of the money. This is out of the money put option data and which is having the maximum OI 28. This is very close to ATM, so let's ignore that and let me choose 14,900 or 14,800. Okay, 14,800. put, and I'm gonna buy, done. Okay. All right. Oh my God, the risk reward is very bad. Let me select 14,700 and check. Sorry. $14,700. No. 14,900. 14,950. All right. All right. Let's get on to slides first. We're gonna get few few more insights. Okay. Which strikes to choose. So we need to buy one out of the money put option and sell one at the money or in the money put. Okay. So we need to be buying out of the money put option. That's what I did. I have bought 14,900 put option and selling at the money, which is 15,000, or ITM. ITM. Okay. Let me select ITM. What is ITM? Strike price, which is in white, sorry, yellow area. Okay. So ITM is 15,150 or 15,200. Okay. 15,200. Okay. Modify. All right. Seems 1:1. All okay. And this should be 14,900. Yeah, 1:1, close to 1:1. Okay. So which strikes to choose? I'll be explaining again. Don't worry. Okay. Don't get confused. We need to be buying out of the money put option and selling at the money or in the money put option. Okay. Remember this ITM. ITM is very important. You will be forgetting this. Okay. Write this down. Okay. So we need to be buying out of the money put option and selling at the money or ITM, slightly ITM put option. Okay. And what's risk and reward? All right. Let me implement this with Bank Nifty and explain you guys clearly. Okay. So Bank Nifty, and let me select options. Then let me select nearest expiry. Then what is ATM? 35,500. Okay. So 35,500. This is 35. Okay. This is 35,500, and I'm gonna select put. What should I do to implement the strategy? I need to sell at the money put option. Okay. Then I need to buy out of the money put option. Okay. What is out of the money put option? Bank Nifty. And out of the money put option is 35. Okay. 35 or 35, 1, 2, 3. Okay. Sorry, 35. Okay. And buy it. All right. So this is how it looks like. For better risk reward, instead of selling at the money put option, let me select in the money put option. Okay. So I have sold 35,500, but I'll be selling 35,700 for best risk reward. Okay. 35,700. 35,700. All right. Done. Now look at the risk reward. 8,500, close to 1:1. Okay. So look at, this is the maximum profit that you're gonna get. This is the maximum loss you're gonna get, and you need this much capital to implement the strategy and hold them overnight. Okay. And this is a break even point. Okay. And this is how your payoff chart looks like. Okay. All right. That's all about risk reward and break even. All right. So what's risk? Risk is limited. As you look at payoff chart, if you look at payoff chart, look at the risk. Risk is limited. Okay. The risk is limited. You're not gonna lose more than 8,900, and you're not gonna get more than 8,500. Okay. So the risk is limited here, and the reward is also limited here. Okay. So risk is limited here in bull put spread option strategy, and even if the market falls down to zero, then also you're not gonna lose more than 8,000 change. Okay, so the risk, because positions are hedged here and your risk is limited here. Okay, and this is a formula to calculate the risk. And reward is also limited. You can understand it by looking at payoff chart. Okay, and this is a formula to calculate reward, which is not necessary to remember. And break even points, this is a formula to calculate break even point, and you can understand it through payoff chart as well. Okay, and this is how your payoff chart looks like. Okay, and when to implement, simple. You can implement this strategy on any day at any time. Okay, and entry exit stop loss for bull put spread, simple. Entry can be at any time on any day. When you just need a view, you just need market to be moving upward. Your analysis should say that market gonna move up before the next expiry. Okay, so with that view you can make good money with good risk reward ratio if you want to deal with this strategy. Okay, and exit, as profits are limited, exit when you see maximum profit. See, if I when I'm having a look at payoff chart, my payoff chart is saying that the profit is constant once it crosses 35,743. Okay, 35,000, after 35,743 my profit has become constant. It's only 8,580. Okay, so when I say maximum profit, I can exit from my trade immediately. Okay, and this is no stop loss strategy because positions are hedged. Okay, as the loss is limited, we do not put any stop loss. Okay, and bull put spread is no stop loss option strategy as positions are hedged here. Hedging is nothing but, hedging is a process that we do to reduce our loss or to maximize our profits. I repeat, hedging is a process which can be done or which can be implemented or which can be used to minimize our loss or maximize our profits. Okay, yeah, we bought out of the money put option to make our loss limited. Okay, so we call positions are hedged here. Okay, so important points that you need to be keeping in the mind while dealing with this strategy. Simple, you just need to sell at the money put option or ITM for best risk reward ratio. Okay, sell at the money or little slightly in the money put option. Against it, you need to be buying out of the money put option, which is having the maximum OI. Okay, you can adjust the strike prices according to the risk reward to maintain good risk reward ratio. Okay, and always have an eye on payoff chart, and you already know that you need to be watching index chart instead of watching individual PE or CE chart. Okay, all right guys, if you guys have any question, please feel free to call us anytime. You can message us anytime. We'll be very happy to answer all your questions. Okay, so like this video, please like this video and subscribe to our YouTube channel. Thank you guys, thanks a lot. Thank you everyone. Happy trading.